Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market wrap-up for this active Monday, the 24th of April, 2017, about 4:35 in the afternoon. As you can see, the markets finished on an exceptionally strong note. This is all due to the French election at this point, where the markets took a sigh of relief thinking that Mr. Macron, Emmanuel, I think it's Macron, will be easily the candidate to defeat Marie Le Pen. Now, I don't know if that's going to be the case or not. You must understand, now it's just a two-candidate race. We had a lot more. I think we had 5 candidates in the last one. That all changes as people start moving on, and how much of the people that lost can actually move their candidates to one or the other. The next thing is, if Mr. Macron wins, is he more than a figurehead president? I mean, he has no political experience to speak of. So there's many questions, but at this moment, the market is euphoric, taking off. It does not matter that North Korea continues to threaten the U.S. and say that it's going to blow our ships out of the water. But for added security, it appears that we sent the USS Michigan, an Ohio-class guided missile submarine, to Korea now. So we not only have that task force, we've got the Carl Vinson force, we've got submarines, God only knows what else is going on there. But it's a hotbed, and very shortly it'll heat up to the point where we have a better idea of what's going on. That task force should arrive middle of the week, no later. On the energy sector, still weak. Grain's up a bit. We have big rains coming in on the middle of the week into parts of the Midwest and again over the weekend. So what people are wondering is, with corn, let's assume it's about 20% planted or so on, how much of it has to get replanted and move on? Because it's April 24th, you might get a slight bid to it, but I'm not convinced it means an awful lot. Beans were up actually stronger than anything else today. Bonds and notes, as expected, they would give back some of their gains as you get the stock market rally as powerful as it is. So here we are in the S&Ps, and the market is back up to 2370. It is within striking distance of the all-time high, still not there. It has not been able to break out of this sideways trading range on the weekly charts. Keep that in the back of your mind. On the daily area chart of closes, we're in an up thrust. You can see how the market has picked up now. It's got this pattern of higher lows, higher highs, right up to today's close of 2370. You have a gap on the chart, as you'll notice. Gaps often get filled. So keep that in the back of your mind. Could it be a breakaway gap where you get another gap and you're on? It could, but if it isn't right away, I'd be a little bit cautious. But we have Wednesday, the president's tax plan. He's going to lower, according to the according to the Wall Street Journal edition, U.S., he's going to announce a 15% corporate tax plan is what he wants. Remember, he can't enact it as law, but he can go on and say what he wants it to be. We'll see. That's an awful big drop. It appears that it's going to be a type that is called dynamic, which means it pays for itself over time. Static is the word that is used for revenue neutral. You take it from the left hand, give it to the right away, and there's no real impact. This dynamic means it's got to produce its results over the years. But the market did break out to the upside. Is it just like it was here, another move, and then slips back? Can't say. What I can say is the trend turned up. You do have the pattern of higher lows, higher highs. You're over the 18-day average, and you'd been fighting there, as you can see. Literally, I'm going to pinpoint it back to here as a minimum, but I could take you in the mid-March and even argue that. But I'm going to say from right there, the last week of March, and so far it acts like a market that wants to come up. Now, here's the interesting thing. With this rally, will you get buying? at the 2350 level, that 18-day average? I think a lot of traders are going to ask themselves that. When I look at the market and I see that you got up to the upper Bollinger Band and failed there, you couldn't stay over it, it's still a sign to me that the market is not ready to run to the upside, that rather it's a back and fill market, but we'll find out, all right? We'll see if I'm right or wrong on that. Momentum-wise, the market is showing upward. So in summation, you have swing line bullish. Momentum certainly up here over the 18-day average of closes. The slow stochastic momentum is leading price, and that's pointing up, but you've hit the upper Bollinger Band, and that has been a way to stymie ups and downs in these markets recently. In the Dow Jones, let's start at the last part. Slow stochastic momentum pointing up. Higher lows, higher highs. Upper Bollinger Band, 20,734. Today's high, 20,732, and you slip back 30 points. I have the same scenario on this chart. The poster child, and I keep using that word and you know it, has been the NASDAQ, which is the one that has been able to try over and over, and it does. It makes a higher high, but then it quickly falls back into that trading range. Will it do it again? Tomorrow's going to be an important day. What is tomorrow? Tuesday. What do we call Tuesdays? Turnaround Tuesdays. Let's see if, in fact, that is going to be the case. In the Russell, it really stuck its head up, didn't make its new all-time highs or any of that, and it's not trending. It has a pattern of a higher high, a lower low, and we had a bullish crossover. The 18-day average did get over the 100. So if it's going to follow through will mean making a new high higher than today's high. Let's see if that happens. It's day one of over the upper Bollinger Band. So I don't want to be a naysayer. The markets are in uptrends. The problem is they're all at their upper Bollinger Bands, and that's real bothersome to me. And Tuesday being that reversal day, watch out. Remember when they were trying to break this market out to the upside? Now, it seems like a long time ago. It was a week and a half ago, no more than that. You have gone from over 16 to back to 1084, right into this support. How is that for a market that failed miserably to follow through to the upside? The trend is down. You're under the 100-day average. You might extend to the lower Bollinger Band. If you were really going to get a stock market that's going to rally, it's got to bust through this lower Bollinger Band and really set the market off. I'm telling you, tomorrow's a day of caution. In the bond market, you fell back, dramatic in fashion, got under the 18-day average and snapped right back. So what do I teach you here? That often when a market starts down for a correction, it likes to get to that 18-day average, and that's where it tries to find its support. It's exactly what occurred. 5-year notes, or 10-year notes in this case. Lower highs, lower lows. Looked like the world was falling apart. Market bounced away. We need a correction because you're now overbought in all these Treasury instruments. The dollar index is oversold, got to the lower Bollinger Band, closed the day at 98.97, which is the first time we're under the lower Bollinger Band of 99.14. So let's see if it acts the way that it did in the past, finding support at the lower band and then throwing itself the other way. The problem is the dollar's still overall in a downtrend and nothing friendly there, and the euro got crazy euphoric today and just exploded to the upside. That's the danger with going through elections and major reports. It's one thing if the election is pretty well expected one way or the other, but remember, Mr. Trump and Hillary Clinton. What happened the night of the results? The stock market came crashing down, and then what occurred? Right on through the ceiling. Always dangerous in these events. That's the point I'm trying to make. The market on Friday found its support against the 18-day average, and today over the upper Bollinger Band. It's really not trending. And by the way, look at the Swiss franc. All it did is rally to its upper Bollinger Band and fail. British pound seems to be stalling here in an overbought market. If you get under 127.76, you may get a bit bigger of a correction than you're counting on. Last, the Japanese yen comes screaming down to the 18-day average of closes, 91.06, actually gets to 90.75, turns around and goes up almost 50 points from there, finishing at 91.30. Again, I'm going to argue that 18-day average acted as its support. WTI crude oil, you know what I'm going to tell you. Pretty close to that lower Bollinger Band in an oversold condition. This is an important area for the market, and it's probably extended itself a bit too much. Gasoline goes down to the lower Bollinger Band, oversold. Not saying it can't go lower. I'm saying pros, I think, are covering shorts here the way that they often do when you get to the upper Bollinger Band. It's theoretical resistance and support. Nat gas, same thing. You fell back down. You had this one spurt. Now you're at that funny time of the year. You're neither too hot, too cold, and there's not a lot of demand for the product, so it slips back down to the lower Bollinger Band, trying to find support in an oversold market. I warn you, tomorrow, Tuesday, turnaround Tuesday day, probably going to be a vicious trading day. I'm going to be here early to watch it. One of the things that I put in my tool chest, and I offer this to you, is a 2-week trial, if you'd like it, to the Moore Research Center. Now, what this does is they have computer databases that go through the markets and they say buy here, sell here on a specific date. Then they track that back. In order for the trade to be working, I think it has to work 12 out of 15 times for them to keep it. It's either 12 or 13. Then they drop it if it doesn't do it. The nice part is you have interactive seasonal patterns. So let's assume you think that the market's in a bull trend, or you think crude oil's in a bear trend. What does it do at this specific month based on seasonals? That's pretty interesting to know. So they offer you a 2-week trial. What you do is you'll sign up on our website for it by going to www.iraepstein.com. You can call us. We'll get you set up. You can also go up here at any time and just click this icon on. From there, we'll turn your name in for you. They will sign you all up for this. They'll send you your user ID and password. Away you go. I look at it every day, something you might be interested in. I'm Ira. You have a good day, and I will talk to you all tomorrow.